Hello and good morning to Business Today Television. My name is Shail Bhatnagar. Welcome to Market Today. Let's start with the major headlines on this wonderful Monday morning in New Delhi. Indian stocks are likely to punch into higher orbit on Monday as investors celebrate the successful completion of the G20 event and wade through data to pick out winners from several transnational projects announced during the two-day weekend event. Indian railway stocks will be in top form after the G20 announced the setting up of a sea rail road network from India to the Middle East and onwards to Europe as an alternative to China's Belt Road Initiative. Welcome once again to Market Today. My name is Shail Bhatnagar. I'll be with you for the next 1.5 hours and we'll dissect how markets look on this wonderful Monday morning in New Delhi. 2 or 3 things have happened over the weekend. One, the trend has shifted towards strength from neutrality and weakness over the last 2-3 weeks. The last week has been fabulous for Indian markets as the run-up to the G20 event started. Now this event was very successful over the weekend and that has resulted in 2 or 3 outcomes. One, India's global standing amongst the Committee of Nations has increased dramatically. The G20 event also announced a slew of projects which are transnational in nature. One of them was the sea to rail to road corridor from India to the Middle East and onwards to the Europe. So it's called India Middle East Europe Economic Corridor, and that's something that's really going to enthuse investors when it comes to the practicalities of picking stocks. We'll discuss this in a bit more, but there is a lot of things to rejoice as far as markets are concerned. Let's immediately see what's happening on the Nifty, and then we'll slowly dissect other sectors which seem to have a beneficial impact on markets today. Let's start with the Nifty. In front of you is the daily chart of the index, and what you'll see is that over the last 1 week, which is Friday's close the previous week, starting Monday till the previous Friday, we've seen a fantastic rally. From a low of 19,230, the index went up to 19,820. And that's a phenomenal addition of about 580 to 600 points. That has resulted in 2 or 3 other things that have happened. As the graph very clearly shows to you, we are headed for an all-time high in the markets, and this is still a young futures and options expiry when it comes to the month of September. We are sitting on the 11th of the month, and that's something heartening. So 2 or 3 positives as far as the G20 event is concerned. Technically, the market is slated for higher gains, and as far as the broader markets are concerned, you've already seen a fabulous rally happening in mid caps, small caps, stocks of all hues in the public banking sector, defense counters, railway stocks. All of them have been on a tear, and that is likely to continue. We'll be having a lot of guests coming on to the show, and we'll discuss what needs to be the cautionary impact of this market, as also where they find value after the G20 event. Like I said, India is now seen in new light as far as foreign institutional investors are concerned, and that should also help turn the tide as far as foreign institutional inflows are concerned. Let's look at the Nifty once again, and I'll tell you how the Nifty moving range has changed as far as options are concerned. Now we see a very strong support emerging on 19,800 as far as the options and technical charts are concerned, and similarly the old resistance of 20,000, something that we had failed to overcome in the month of July 2 or 3 months ago, July 21st to be precise. That is seen as an interim resistance. Given the momentum, given the strength that the market is seeing, there is likelihood that this resistance will be overcome. Now, 2 or 3 other things that you need to keep in mind is that it seems that traders have thrown caution to the wind, and that is something of extreme, how should I say, impact on sentiment. Should you be trading in this kind of a market, 2 or 3 things you have to keep in your mind. One, you have to be very, very careful with your fresh longs that you see in the index. Stop losses have to be very, very clear. They are a must. In fact, the most necessary thing that you need in your life is a stop loss, and they should be very near the current market price, which means that if you have already participated in this rally, keep your stop loss higher so that this level of profit can be protected. One is this, and of course extreme caution is advised when you come to entering fresh moves into the railway space, into the defense space, into the PSU banking space, into the wider PSU basket, because we've seen a very, very sharp run up happening there. So that's the Nifty and the broader markets. Let's also look at how the bank Nifty is looking as far as the charts are concerned. The other thing I wanted to mention was in Friday's trade, the top 2 gainers in the FNO space were PSU stocks, which is RECL, Rural Electrification Corporation, as well as PFC. And similar is the case as far as Nifty is concerned. The top 2 gainers were PSUs, which is Coal India and NTPC. So you have to exercise a lot of caution when you want to chase this kind of momentum, and of course stop losses are necessary. Let's again come back to the bank Nifty. My sincere apologies to get into the PSU basket again. The bank Nifty is not as strength as far as the Nifty is concerned. Of course, the Nifty is in a better position, but the trend is also turning for the better as far as bank Nifty is concerned. Sentiment is positive on Nifty and blue chips, and it's also seen rubbing off on bank Nifty as well. So the in the money bank Nifty calls showed a very, very sharp bout of short covering as far as the Friday's trade was concerned, and that basically means bulls are on the front foot and bears are sort of evacuating that space and making it empty for bulls to enter. So the trend is bullish, and bank Nifty trading range is seen anywhere between 45,000 to 45,500. Of course, the close was 45,150 and thereabouts, and that's how bank Nifty is. You've seen it act very, very strongly on Friday as well as Thursday after a 3-day pause the previous week. So these are the 2 major indices that we often discuss about in the beginning of the show, and I'd request the PCR to come up with a comparative chart of the Nifty, bank Nifty and the global indices that are there, so that you can have some kind of a comparative between Wall Street and the Dalal Street. So of course last week's rally was fantastic and then pulled the Nifty higher in front of the Dow Jones index, which is a comparative index on Wall Street, and that's something good. But the year-to-date performance of the Nifty shows decent 9% uptick. You are in the 9th month of the calendar year, and a percentage rise each month is significant. So for people who think that the market is overheated on the Nifty, that is not really something to be accepted as far as data is concerned. The market is in absolutely perfect shape, neither much overvalued, neither much overextended as far as the Nifty is concerned. Of course, the mid cap and the small cap are 2 different things. We'll talk about that later when our guest Mr. Deepan Mehta joins us. That's a different discussion. But as far as the Nifty is concerned, given the change in the background, the temperature as well as the weather as far as India is concerned, Nifty is in a fine shape. You needn't worry as far as overvaluations are concerned. We don't see that happening anywhere. But the Nifty mid cap and the Nifty small cap indices are in a bit of rally, which is phenomenally good. Let's without wasting further time get to our first guest, Mr. Deepan Mehta. Mr. Mehta is the director of Elixir Equities and has kindly consented to spend some time with us. Deepan, welcome to Business Today Television and Market Today. What a glorious day to be a part of this wonderful journey that's unfolding on Dalal Street. How do you rate sentiment after the successful completion of the G20 event?
No, good morning, and thank you for having me on your show. I think really it was a class apart, and it showed the world that India finally has arrived. It is a moment in the sun, and the G20 clearly, I think, showcased that. So I think overall the mood in the nation is very positive. First for the Chandrayaan, and thereafter we had this G20 event. So on the whole, I think sentiment, the feel good factor is at a multi-year high, as I see just now. And even Wall Street, cannot match what is happening over here on Dalal Street, where we are seeing so many stocks scale to newer and newer highs. And the way the markets are shaping up, I think next few quarters looks to be extremely interesting.
Right. Deepan, a couple of things. The wisdom that's visible in your graying hair has spanned about 3.5 decades. I just wanted to understand, at this kind of a sentiment level, why are our foreign funds and friends net sellers on a fairly large basis? Would you have a view on that?
That is the question you have to ask them. And I'm scratching my head to figure out what is the thing that why FIs are selling. But I think, they follow a very straight-jacketed approach to investing. And optically, the price to earnings ratio certainly are on the higher side in India. And that may be keeping them on the sidelines. But you have to go deeper to understand our Indian markets. And this is not a 1 quarter or 1 year story. There are many companies which have got very good earnings visibility for the next 2, 3 years or so. And if you take those earnings into the future, then today's valuations, of course, few stocks are overpriced, but today's valuations also may sustain these price levels. So I'm a bit perplexed why they are continuously selling at these levels. My sense is that once they see some good quarterly earnings, maybe September quarter, December quarter, and the valuations thereafter start to compress because of earnings growth. At that point of time, we may see additional FI inflows.
Right. Deepan, our PCR will be firing the long-term charts of Nifty Small Cap and the Nifty Mid Cap Index. It's been a blowout calendar year for both these indices, and we've seen a 27-28% rise over the past 9 months, just overshadowing the 9% increase on Nifty. Why are people so aggressively bullish on mid caps and small caps? And do you think, given the experience that you bring to the table, this is a time for extreme caution?
Yeah, it's a very nice question. And it is interlinked to the earlier question you asked as to why FIs are selling. So basically, we have a situation here where domestic investors, being extremely optimistic on the Indian economy and corporate earnings, are buying into equities, and they're absorbing the selling flow coming from the FIIs. And the thing about domestic flows is that they tend to go more into small and mid-cap companies. A lot of money is coming into our mid-cap funds, and a lot of money is coming into portfolio managers. Individual investors also are very active on the street. So that's why we are seeing so many small mid-cap stocks scaling to new highs. And also the major characteristic of the small mid-cap companies is that there is not that much of liquidity. And even small amount of buying can result in extraordinary gains, as we have seen. Another aspect to consider is that when more and more money is coming into small mid-cap funds as well as portfolio managers, they tend to buy the same stocks which they have bought earlier. And those also start to rally and start to move up at higher and higher levels. It's not that you can find new ideas every day. So that explains why small mid-cap companies are going up. And yes, I think that I would like to add a word of caution over here that maybe for the time being, at this point of time, the rally in small mid-cap stocks may be a bit overdone. So investors and traders should be a bit more careful if they are buying at these levels.
You know, we have a common friend who runs India's largest small cap fund, and I was speaking to him last week in Mumbai, and he mentioned that in one particular month he had an inflow of 1,000 crore rupees from a single industrial group, and he had no option but to invest. He couldn't be sitting on cash. So that's the kind of inflows that are coming in small and mid cap funds. And as Mr. Mehta very rightly said, a large part of this rally is because of low floating stock and the fact that you can't find a new investment stock on a fairly regular basis when it comes to mid caps and small caps. So fund managers are constrained to actually buy more of what they already have. Deepan, shifting focus to the PSU basket. This is a rally which is unbelievable when it comes to the defense space, and of course the new trend that is still going to go a bit higher when it comes to railways. What do you think is happening in the defense space, and what would be your top pick there?
See, I think let's look at the broader PSU basket, and the entire term of the Modi government has seen the resurgence of PSUs. I think multi-decade underperformance is being corrected. It's not completely corrected. Multi-year underperformance of all PSU stocks is being corrected at this point of time. And last 2, 3 years, we have seen them going from strength to strength. Of course, there are very obvious reasons for it: better governance, more focus on Atmanirbhar and manufacturing within India, also overall economy doing as well as it has done, improvement in capex cycle, and greater degree of independence being given to PSUs is the main reason why we are seeing such a fantastic rally in PSUs across the board. I mean, there hardly is any PSU which has not done well over the last couple of years or so. So that's a common investing theme across all these PSU stocks. Specifically coming to railways or defense or any other capital goods PSU company, it's very clear. I think there's more and more expenditure taking place over there. These companies are winning huge orders. And mind you, when PSUs are engaged in any kind of a capital equipment or project business and the government is spending, they automatically have an advantage because they are pre-qualified and there's a preference given to PSUs as well, even a price advantage in some instances. So when the government is spending, government capex cycle is on the upswing, be it railways, be it defense, be it infrastructure, it is the PSU companies will get the preference, and we are seeing their order book bulging over there. The only risk factor is execution, and there could be volatility in earnings. So by and large, this PSU rally is bound to continue for maybe many more quarters, if not years. But at this point of time, as I said earlier, I want to be a bit cautious. We have seen a fantastic run up across the board, whether it is PSU banks, PSU engineering companies, defense companies, railway companies. So maybe you could expect a pause over there. And it's best to just wait and watch. We have a earnings season coming around the corner in about 4 weeks from now, and there will be more clarity on earnings, and that may be a good entry point.
You know, Deepan, I meet a lot of young investors and, of course, people in our age group who've seen 5 or 6 bull markets. You'd be surprised with actually not surprised, worried with the level of bullishness that the new crop has when it comes to picking stocks. They don't believe that there is something called price to earnings, which has a correlation with how should I say how far the stock has moved and how quickly it has moved. So a lot of worrying points are emerging in this kind of a bull market. But then, like I said, it takes all kinds of players to make up this wonderful market, and I'm sure we've seen this earlier, and I'm sure we are going to see this in the next bull run as well. Be that as it may, I'll request the PCR to fire a group of railway stocks which have run up very sharply over the last week as well, and as also over the last 3-4 months. Deepan, we've seen the announcement of the India, Middle East, Europe Economic Corridor, the fact that there's going to be a sea, rail and road link between Indian ports as also the Middle East and Europe. Where do you think the railway stocks are stacked up, and would you have a top pick in this sector?
Yeah, as I said, we do not have a pick in railway stocks at this point of time because we want to be a bit cautious. A lot of the railway stocks have moved up significantly over the past few months or so, and I expect them to pause at this point of time. And I want to see what the numbers are coming through for the September quarter and what managements have to say in their con call. So I wouldn't advise buying into railway stocks at this point of time. Although there's good earning visibility, they are getting more and more expensive. And investors have just seen good quarters, but these are project businesses, and execution, delivery, percentage of completion, method of accounting, all of these do come into play. So one should expect there could be a soft quarter, although you may have a very large order book position, there could be one or two soft quarters for various reasons. And then I think the conviction of the investors or traders will get tested. So I'm just waiting for a right opportune moment to get into these companies. As of now, for your viewers, I have no recommendation on the railway stocks.
Fair point, and one of those wonderful experiences that Deepan brings to the fore. Don't just get into this overheated market simply because there is hype in the market, as also news flow and order flow. Well, of course, Mr. Mehta, you are one of the well-known stock pickers on the Lal Street. Let's see what's in your quiver. Any stocks on the longer term that you feel will benefit investors if they get into a SIP format in them at current levels? What are you advising your clients to buy at a time when Nifty is slated for an all-time high and we've seen a record rally on mid caps and small caps? Sir.
See, I think that this question is asked many times, and my preference right now is for large cap index stocks. I think that there is some comfort over there in terms of valuation, and at least there is, I would say, price protection, because if a correction is expected, then these stocks will fall little less than the small mid cap stocks, which, as you know, the counters are pretty thin. So even some selling over there of a normal type can cause an exaggerated price move. With usual disclosure, we and our clients are invested. I think we want to go for large cap index stocks, companies like Reliance, HDFC Bank, Larsen and Toubro, Maruti. A few pharma names also come to mind: Dr. Reddy's, Cipla, and aviation company Indigo, Indian Hotel. So our basic positioning is that wherever the sectors are doing well, be it banking, be it tourism, be it capital goods, be it automobiles, we want to be in the top one or two companies within that sector, and go for large cap companies, so that when a correction will come, and it always does come when you expect it the least, there'll be some protection in terms of drop in these prices. And I do feel that at some point of time, the FII sentiment again in India will turn for the positive, and these are the companies which will get the maximum inflow at that point of time.
Fair point. Anything, Deepan, that you feel is in a favorable position when it comes to mid caps in the construction space, maybe a piping company?
No, I think that by construction, if you mean the engineering construction companies, certainly that space is looking very interesting. And across the board, we are seeing phenomenal order book build up. Usual disclosure, we and our clients are invested. We like two or three companies in particular. One is ITD Cementation, second is PSP Projects, and third is NCC. But as I said, I think my entire tone is more towards caution. So we like these companies. They are great long-term stories. They're sitting on massive order book position. There's good earning visibility. But if the markets were to correct, then these companies also will get impacted. So while you may keep them on your watch list, I think opportune time to buy would be when there would be a 10, 15, 20% type of a correction. And it may sound a bit awkward that how can you expect a 20% correction in a stock, but it happens very often in mid-cap stocks. You go back into the price chart and you will see that even in a bull market, there are many situations and many periods when you see a 15-20% type of a correction, and then it quickly regains ground to scale to higher and higher levels. So those are the types of periods that one tries to look at. Normally, I don't advocate timing, but look at the way the markets have gone up and what price to earnings multiples a lot of stocks are trading at. So I just want to be a bit cautious, and as I said, wait for the earnings season, then see the numbers which come through, and then take an investment call.
Right, Deepan. This is an absolute mirror image of my thought process, but it's as if people like us have been banished from the markets. In the sad explanation that we have really no idea about what stock picking is and how markets could change, but the fact remains that corrections come in unannounced, and the markets can be irrational both on the long side and the short side more than what you can be solvent. With that caution, we'll also wait for the markets to hit a fresh high. Such is the state of sentiment, and of course these are really good times when it comes to both the Indian economy as well as the Indian markets, and both Deepan and I are enjoying this wonderful rally. Remember, we are not selling, but we are certainly not buying at these levels. Deepan, the other sector that's come up dramatically well over the last few months or so is the metal space. It's not as overheated or overexposed as you see the PSU or the defense rally, but still there are some pockets of undervaluation. How do you analyze metals for your clients?
Generally, we do not like to invest in commodity stocks, including metals. And the reason for that is that there's a lot of noise, there's a lot of data flow. But end of the day, when you see point to point over a 3, 5, 10-year period, there's not been great value created. There are a few exceptions. I think JSW Steel comes to mind, has been a phenomenal wealth creator, purely because of its focus on domestic market and rapid expansion of capacity in a cost-effective manner, thereby reducing the execution risk. But apart from that, by and large, commodity companies have not delivered great returns within India, globally as well. So we want to avoid. But yes, I think at this point of time, that is one kind of sector within the markets which is available at reasonable valuations. And I think if you have a bit of a trading mindset, then certainly metal stocks can do well. We are seeing that crude oil prices have moved up, and that generally has a slightly positive impact on the entire commodity sector. It's not that they are so linked together. There is a mild, correlation, positive correlation between crude oil prices and other commodities as well. So you could have commodity prices move up slightly, and that certainly can improve the sentiment in these stocks. But as I said, I think I want to go for companies which have shown phenomenal execution. And of course, JSW Steel comes to mind. Even Reliance Industries, I think, which has got a very large commodity type business, be it in petrochemicals as well as refining. I think that also should benefit from the O2C division doing exceptionally well. And that does drive the profitability over there and does improve the cash flows for Reliance Industries. So that's another company which comes to mind. Apart from that, by and large, I think unless you don't have a handle on which way the prices are moving in the commodity market, you should not be dabbling in commodity stocks.
Fair point, Mr. Mehta. The pre-market, the pre-open trades are in front of us, and there was a brief flash of the Nifty going above the 20,000 point mark. We'll let that settle. We'll also welcome Mr. Akshay Bhargwat to this wonderful discussion. And for a moment, let me just pay attention to some pre-open trades. A fantastic rally on the cards today. The Nifty is open at least 100 points higher, 19,926. So we are within a breathing whisker of the all-time high. And there was a very, very brief flash when the Nifty actually went above the 20,000 mark. Let's look at what the winning stocks are for the moment. Let's pay attention to the index heavyweights. HDFC Bank is opening 1% higher in pre-open trade at 1639. I want to see what Reliance is doing, 0.3% higher at 2456, and Infosys 1% lower at 1455. These are the three heaviest index weight stocks. Of course, a record high again on L&T, 1% higher, 2930. This is India's largest engineering company. Bajaj Finserv 0.84% higher, 1554, and the Nifty is now settling sensibly, 51 points higher, 19872. A very, very quick look at what's happening in the pre-open trade as far as railway stocks are concerned. We've seen RVNL 3% higher, 168.80. IRFC 3% higher, 79.80. Let's look at the PSU basket minus the railway stocks. What's happening there? We have Shipping Corporation 4% higher, 161. SGVN 3% higher, 65.90. Let's look at high beta. Within the high beta space, you have CDSL 3% higher, 1320. Lemon Tree 1.5% higher, 117.13. Havells 1.7% higher, 1474. This is how the pre-open is settling. Let's wait for it to finish its trade, and then we'll pay attention to there. But as good a time as any to welcome Mr. Akshay Bhagwat. He's the Senior Vice President Derivatives Research at JM Financial Services. Akshay, welcome to Market Today. What a wonderful time to be in markets. Tell us one or two stocks that you're looking at positively when it comes to today's markets.
Good morning, Shailji. Thanks for the invite on the show. Truly, it's a wonderful time to be in the market, and especially sharing the view when we already have got a teaser of the 20K mark in the pre-open trade. So just to share, Shailji, it took 25 trading sessions from 19,800 to 19,250 journey in the month of August, and just 6 straight trading sessions to get back to 19,800 mark. That's the kind of strength the market displays right now, and possibly we are gunning for the targets of 20K, where that will be the decider as to how we take it next up from there. As far as the two calls which I recommend today, one is Punjab National Bank, a very strong setup on technical charts backed by the derivative readings. We would recommend this to buy at current market prices at 67 to 66. We would target 69 on the upside with a stop loss of 63.9. And the second trade I recommend is Havells, which saw a very strong, powerful breakout in the last trading session. This was backed by strong volumes, and even on the derivative setups, we did see strong buying action. So we recommend to buy Havells at current market prices for a target of 14.95 and second target of 15.20 with a stop loss of 14.10.
Okay, so these are the two stocks that Mr. Bhagwat has on its screen. Let's look at the long-term chart of Havells. We've already seen a super breakout that happened on Friday. In fact, Havells was the top gainer when it came to the F&O space, 1450 here, and it's already opening 1.3% higher. A blowout that happened on Friday, both in terms of price and volume. The all-time high on this stock is 1504, which we saw in the month of October 2021. So it's almost a 2-year high coming back when it comes to Havells. Of course, PNB has been a market darling over the last maybe a year, and 66.85 is where PNB is opening in initial trades. Akshay, sticking with you, where do you find value when it comes to nifty blue chips? We've seen a remarkable rally in mid caps and small caps, and I hesitate to even ask a stock from that space, but blue chips are relatively undervalued when it comes to checking out mid caps and small caps. What is your top pick within the nifty space?
Well, the big boys are back in the game. If you look at the August series, it was rather subdued for the top blue chip companies of the Nifty 50. But if you look at the price and the derivative action in the last few trading sessions in the beginning of September, it's been Reliance which is trying to pick up. There are some green shoots emerging in Reliance. Secondly, we are seeing SBI too back in the game, backed by HDFC Bank. So these three stocks are stocks which might hog the limelight for the month of September. Especially the best of the three would be HDFC Bank, because it has recovered from a strong technical support point of 1580. So there's where I see strong momentum gain if we were to look at from a slightly long September month perspective for the whole month. HDFC Bank can possibly again go for the upside of 1675. The support is 1580 as I mentioned, so that would be a stop loss below the support. And even Reliance can show some good recovery from the current zone. Reliance can again has a good strong support base at 2400. Strong put writing based action in the futures and option segment at the support level of 24, backed by some news on the last trading session. So we can again see Reliance heading for the 2500 mark in the short term space. So Reliance and HDFC Bank would be my preferred bet from the blue chip companies in the current market scenario.
Right. Let's get Deepan into this debate and make it a three-way. Deepan, let me just read out some prices which I'm sure will sort of make your heart aflutter again. Mazgaon Docks, 2% up, 22.50 at fresh record high. Hindustan Aeronautics, 1.8% higher, 41.78. Deepan is smiling and I know why. Cochin Shipyard 1.6% higher, 12.28. And of course Garden Reach 900, 1.1% higher. Remember, these are pre-open rates. I hate to ask this question again, Deepan. What's happening with shipbuilders? Are they making rockets?
No, they're not building rockets. I think they are seeing a multi-year upswing in their order book position, and the street is recognizing the true strength of their business model and what value proposition they are offering. As I said, I think we are in a super capex cycle at this point of time. Government spending, private sector spending is at very, very high levels. And these companies have been around for a long, long time. And mind you, shipbuilding is a very difficult business to get into. It's got very high moat because to get the right location is very difficult. And these shipbuilding companies, they've been around for a long time. They have fabulous infrastructure at key locations. And not only are they pursuing domestic opportunity, but there are a lot of tie-ups with large countries and large operators globally for ship repair as well, which is opening up as a new opportunity. And the order book position ranges from anywhere from 8 years to even 15, 16 years. So the street loves this earning visibility, which is why I think they are, stocks are being preferred. But as I said, I think there's a lot of trading positions in these companies as well. A lot of trading volume, not necessarily long-term investing. So I would like to be a bit cautious at this point of time.
Absolutely. Since both Deepan and I are extremely cautious, let's speak to a young bull in this discussion, and that's Akshay. Akshay, take your pick within the defense space.
Yeah, so at this point of time, I believe it's more of a trading momentum which is catching onto the market. If you look at the mid cap space, that's in a very sweet spot. And I mean, despite the overbought conditions, which have been in fact overbought since the last couple of months, there is no stopping the mid cap index. So we will try to chase where the strength is, where the momentum is, because that's what the best part of trading is. You get quick gains in a very short period of time. So I would like to chase the blue chip companies from here. Mid caps, I will give it a slight miss from here and concentrate more on the blue chip companies, because if I'm thinking of Nifty to get past 20K, it should be the blue chip companies which should come to the rescue.
Right. Akshay is also a bit cautious and he prefers blue chips over the mid caps, and especially the defense space, which is really, really overheated. Okay, pre-open trades have settled. Let me just go through the numbers and then we'll carry this discussion forward, gentlemen. 19,890 for the Nifty, a 70-point uptick that you see on the screen. Let me just share the stocks that have contributed to this uptick. Okay, let's move to index heavyweights. It's HDFC Bank flat 1626, Reliance 0.1% higher 2451. It's L&T 1% higher 2930, ITC 0.6% higher 446.45, SBI and TCS 0.7% higher 588, 3467 respectively. These are the stocks that are pulling up the index. Infosys, sadly, is a percent lower at 1455, but then this is how the markets are. ICICI and ICICI Bank, ICICI and Axis Bank are flat. Let's look at other sectors which are doing pretty well, and I'd like to see what Adani Ports has opened at, because that will be a key link when it comes to this new corridor that's being set up between India, Middle East and Europe. Adani Ports 1.8% higher, 840. This is a stock that you should keep in front of your radar. Coming back to you, Akshay, your view on Adani Ports opening almost 15 points higher at 840.
Well, Adani ports, in fact, the Adani group has always been more in the news and a pretty volatile stock because of the entire news and the volatility which is surrounding the stock. As I see it on the daily charts, it's more in a range with the support base slowly building up at the levels of 800, whereas the resistance works out to 860. So, somewhere we are in the mid of this range. So, my belief is this stock may continue to be in choppy waters for the time being. There is no clear trend as far as the short term or rather 10 to 15-day view goes for Adani ports. I would wait for a slight confirmation or a breakout above 850 odd levels if I was a trader. Yes, if I'm looking from long term investment, then definitely this is the stock to be in, because bearing aside the volatility aspect, I feel the longer term charts are positioned strongly to once again go to the lifetime highs of the stock, which is around 980. So long term, it is bullish. For the short or medium term, we might be in choppy waters.
Right, a swing trader that's getting prepped up on Adani ports, but let's take some view from Deepan when it comes to explaining a view on the Adani group, specifically ports. Deepan, do you have a definitive view on Adani ports?
No, I think that incrementally the company is performing better and better. We are seeing volumes also coming through for the company per se, and the acquisitions which have been made in the past also are contributing positively. It's just that valuations are a bit on the higher side, but that also I think is gradually getting corrected. So I would say that our view is neutral on Adani ports at this point of time. And these are businesses which take time to scale per se. You cannot expect 30-40% type of earnings growth on organically when it comes to a company like Adani Port, because end of the day they're dependent upon the import-export trade, which typically is in single digits per se. So from that point of view, I think it's a steady business, but I'm waiting for the right, valuation level to have a more positive view on the stock. For the time being, I think it's done great. And if you're an investor in Adani Ports, you've seen fabulous returns over the past few years or so, and you should remain invested.
Fine. So let's do a bit of an analysis on the Nifty. It's opening at 19,890 with a gap up of 70 points on this lovely Monday morning, and it has already taken out R1. Let's take Akshay's view. Very crisp, Akshay. What do you want to do with Nifty today? We are really very close to opening trades.
Well, I'll continue to be a buyer in the Nifty. I'll just maybe wait for the first 15-20 minutes to see how the trade settles down. But all-time high is where we are heading for. And that's the point where I will take a decision whether I need to book out or wait for further directions in the Nifty.
Fair. Cautious mood. Wait for the first 15 minutes. We have the opening ticks, ladies and gentlemen. 54 points higher, 19,885 on the Nifty. 150 points higher on Nifty Bank, 45,300. Nifty IT opens 95 points higher, 32,510. Okay, now let's look at heavyweights. What is HDFC Bank doing? 0.4% higher, 1629. Reliance 0.5% higher, 2460. Infosys flat, 1469. Nifty gathers steam, 70 points higher, 19,887. L&T 0.4% higher, 2913. This is how the index heavyweights are. Immediately, let's look at the railway space. What's ticking here? IRCON 11% higher, 149. IRFC 10% higher, 8440. RVNL 7% higher, 174.35. It's a blowout when it comes to railway stocks. The broader PSU themes minus railways. I see SGVN 5% higher, 67.40. MMTC 1% higher, 66. Mazgaon 5% higher, 23.33. Defense is really moving very smartly. Apart from Mazgaon, we have gainers when it comes to Hindustan Aeronautics 1% higher, 41.40. Cochin Shipyard 0.5% higher, 12.17. BEML 2% higher, 26.42. GRSE 1% higher, 8.94. Let's look at the broader F&O basket and see what's buzzing within F&O trade. What are the top gainers here? The Nifty 70 points higher, 19,888. RECL was the top gainer on Friday, now up again 3%, 278. Tata Communications 1.8% higher, 1919. Adani Enterprises and Adani Ports 2% higher, Balrampur Chini 2% higher, 415. BHEL, PFC, Hind Copper, Petronet LNG are the other stocks from the PSU basket that are helping the index and the PSU basket higher. Okay, this is what we see. Let's look at high beta stocks that are traditionally setting up sentiment. CDSL 4% higher, 1335. Havels, this was a pick from our friend Akshay, 0.5% higher, 1458. The Nifty is now steady, 63 points higher, 19,885. Let's look at the broader markets as well, and then we'll touch upon our guests. We track 19 stocks, 19 indices, ladies and gentlemen, and all 19 are in the green. What a wonderful day to be in the markets. The advanced decline ratio on the Nifty is 40:10, yani 4 stocks for every 1 decline are up, and in the broader market, NSE 500, again 440 stocks in the green, 60 in the red. Coming to you first, Akshay, what do you want to do on this wonderful day when the Nifty is now moving higher and higher and is now at 19,900? Akshay.
At this point, I will take my bet on Reliance Industries. Reliance Industries, as I mentioned, has charted a very strong support base at 2,400. The momentum pickup in the first 5 minutes of trade is good enough. Last 4 days have been pretty conclusive enough on the technical charts to possibly see Reliance heading for 2,500 plus. So I will take my bet on Reliance Industries at the current market with a stop loss of 2,420 for a target of 2,520.
Okay, so Reliance is the first call. Let's get Deepan into the conversation. Like I said, Deepan, not a time for the weak-hearted. What would you suggest we do?
As I said, I think that on the whole, our view on the market is cautious. And if you want to deploy money, it has to be in large cap stocks like Reliance, HDFC Bank, Larsen & Toubro, Maruti. I think I stick by that call. And I know that it's very tempting to get into a moving train, especially railway stocks. But these things usually don't end very well. You may not lose a lot of money, but there's always opportunity cost of the money. And I think if you're sitting on some amount of cash at this point of time and gradually adding to your cash basket, then you will have a very sound position when in fact there's a correction.
Absolutely. Like I said, wonderful advice at the time of a very serious bull run goes into the wind, and nobody wants to listen to the sensible points that Deepan and I make. Fair point. That's how bull markets are. And I'll request the PCR to fire a stock chart of Praj Industries. Deepan, the other good part that came out of the G20 was, of course, this global biofuel pact of producers of ethanol as well as consumers of oil products, which is of course the entire world. Would you want to put in a view on Praj Industries? They make equipment that goes into ethanol production.
First, a disclosure, we and our clients are invested in Praj Industries. It has been one of our picks in the past, and the stock has done very well for us, especially in the short term. It's a fantastic company, great technological edge, and maybe at this point of time where there is increased investing in biofuels, this company shouldn't have a problem getting new orders. And I think they're looking at expanding globally as well. And I think this announcement which came through G20 has been a bit of a shot in the arm for the company. So these are companies that you need to keep on your watch list whenever there's a correction. You find valuations to be reasonable. That's the time to enter these companies. These are multi-year, I would say, good investment ideas. You don't have any target price on this thing, but there are so many opportunities opening up for such companies, and they are quality players. They are focused on return ratios. It's a well-managed company, decent corporate governance standards, good quality balance sheet. So from that point of view, it's a great business. It's only that we need to buy them at reasonable valuations. That's all.
Right. I'd also like to draw your attention, Deepan, to the grounding base for all of us, which is the Bombay Stock Exchange. Let's see the stock price here blow out 1424. In fact, I'm also getting a bit tired using this phrase when stocks really go up both on price and volume. 1412 in front of you. Deepan, you've been a old hand on the Sensex. I believe the volumes of Bombay Stock Exchange when it comes to derivatives trades are shooting through the roof. Would you like to share your experience on this one?
No, I think it's fantastic, and congratulations to the team. They've been struggling to get the derivatives market going, but now they seem to have a winning formula, and that certainly is being reflected in the stock price. I know that the derivatives trading is not at levels where it can contribute materially to the revenues, top line, bottom line, but it's a good beginning. And I think if they're able to, kind of scale and build on this thing, it'll be very positive. Higher derivatives volumes will lead to higher cash market volumes as well. And exchanges are typically very high operating leverage businesses. So whatever increase in trading volumes and therefore transaction charges, normally it flows to the bottom line because their costs are pretty much fixed. And clearly, I think with markets doing as well as they are, participation volumes at all-time high, new listings, and increased demand of their information, especially price dissemination. All of these are great revenue, I would say, streams for exchanges, and BSE certainly will see many more of such revenues coming through. Also, they have value in their holding in CDSL, which can be unlocked if opportunity arises. So on the whole, I think the company is doing very well. The exchange is doing very well. But again, it's just valuations, valuations, valuations. I think there's a lot of positive news flow, many investment themes, many stock ideas, but you need to buy them when the valuations are reasonable. That's all.
Fair point. And at this point of time, valuations are, how should I say, sky high, just as prices are. Let's get Akshay into the conversation. And across my screen, I just see unrestrained buying happening in all classes of stocks, whether that's large caps or mid caps. Deepan, the advanced decline ratio on the Nifty is 47:3, and we are at 924. Let's see how that pans out. The first 5-minute candles, the two candles have been formed, Akshay, on technical charts. Nifty at days high 19,910, up about 90 points. Would you like to act or keep quiet?
We are almost near the all-time high levels, near 20,000. So I believe markets should hit those levels. Well, it may just consolidate for the time being, but the idea is 20,000 is where we are heading for. So I would still continue to be a buyer despite we are so close yet so far, because 20K is a landmark. And last time, if you recollect, in August, there were so many instances where all-time highs were just kind of being missed by a few points. So this time my belief is 20K would be hit. So I will still gun for the 20K mark at the current level. In fact, I would say that instead of Nifty, if you can look at Bank Nifty, that would be much more better, because Nifty is almost near the all-time high, but Bank Nifty has still more ground to cover in terms of its all-time high levels. So Bank Nifty would be more preferable over Nifty in the current scenario, because there is more ground to cover, and banking normally takes the lead if the Nifty has to play out stronger in the month of September.
Fair point. So Bank Nifty is the preferred play when it comes to Akshay's call, intraday call on the markets. But like I said, there is all-round buying happening on the Nifty. And let me just see what are the top gainers when it comes to the Nifty index. Adani Ports, like I mentioned, 2% higher. This is the positive rub-off of the India, Middle East, Europe economic corridor that was proposed in the weekend's G20 event. Apollo Hospitals 2% higher, headed for fresh record high above 5100. Adani Enterprises 1.4% higher. Divi's Lab and HCL Tech fairly in the green. What's in the red? Mine, just a basic profit booking happening in Coal India, 0.5% lower. Cipla BPCL 0.11% lower. Like I said, nobody's interested in selling. If you're not buying, people are just sitting on delivery, and bull markets also rise exponentially because of the lack of quality stock when it comes to liquid floats. So that's what is there. And I'd also like to point out record highs in the market at this point of time within the Nifty 500 space. Let's see if some new names have come in. I see Thermax at 2978, 1.8% higher at a fresh record high. Praj Industries 561, 8% higher, again a blowout, a rub-off of the G20. The entire railway pack, IRFC, RVNL, RITES, these are three railway stocks that are at record highs in front of me. 83.45, 174.50, and RITES at 560 in front of me. So these are breakout trades happening. We've discussed BSE 1390, SGVN 6670, fresh record highs within the defense space. BEL and BEML 145.50 and 26.30 when it comes to charts, and very, very strong volume. Let's look at volume buzzers. We are still at 928, and there are some stocks where volume has exceeded last day's play. Praj Industries, 18,90,000 shares traded, 7.5% higher, 555. So price volume breakout as also a rub-off of good news. CDSL, Natco Pharma, and of course Container Corporation. These are 4 or 5 stocks where you see massive volume coming in. Deepan, coming back to you, we still have some sanity when it comes to PSU banks like Maharashtra Bank, Central Bank, J&K Bank, the second rung after PNB, Bank of Baroda and Canada. Would you guess a good pick from there, or are you staying away from that place too?
No, I think if you have a value-based investment philosophy, then PSU banks, especially tier 2 PSU banks, clearly are value plays at this point of time. We are quite impressed with the numbers that they have come last 2-3 quarters or so. And so long as the NPA cycle holds, I think these second-rung PSU banks will continue to do well. They have a large network. They're able to gather deposits efficiently, and they're all focused on retail lending, and that is where I think their branch and their platform certainly will help them. And there is certainly a case for the price to earnings or price to book ratio for these companies to move up. So yes, very positive on PSU banks across the board. Actually, we are quite positive on banks also per se. And our advice to investors would be that at least 30% or thereabout of your portfolio should be in good quality banks. And if you've seen the last few months or so, banks have been a bit of a laggard. So in the event of a correction, I feel banks may not go down as much as some of the other counters.
So Deepan, help our investors and viewers. Name 2 banks, one from the private sector, one from the PSU banking sector, which you would prefer to add in the portfolio via a systematic investment plan over the next 6 months.
See, systematic investment plans work well with a mutual fund and not necessarily with stocks. And if you want to do an SIP with stocks, it has to be the index stocks, which I named earlier in the show. But from an investment perspective, again, disclosure, we and our clients are interested. We like IDFC First Bank. That remains our top pick within the private sector space. And within the PSU banks, I don't really have a preference, but Bank of Baroda seems to have its nose slightly ahead. So that's where, we would recommend if I had to do only a single stock when it came to PSUs.
Fair point. Bank of Baroda today crossing the 200-point mark again, and that remains Deepan's preferred bet when it comes to the PSU basket. Mr. Mehta, what a pleasure having you here on this lovely Monday morning. when the Nifty is headed towards record highs, and we've seen a fantastic exposition of India's soft and hard power over the weekend when it comes to the G20 summit. We hope you'll be a regular guest from now on, and again your wisdom and your experienced stock picking will help us navigate these markets. Thank you so much for your time, sir.
Thank you. Thank you. Thank you.
Well, that was Mr. Mehta for you, Director, XLS Equities, a very fine gentleman and a wonderful stock picker over the past 3 decades on Dalal Street. Now it's Akshay and me to spend the next 15 minutes talking about charts, pennant, flag positions, and of course where markets are headed. So Akshay, tell me, when clients come to you and talk about investing money at current levels and they want to double their money in 1 week, what do you tell them?
To be honest, mid-cap space is really that space where, at least you can think about doubling your money at the given juncture in a very short time frame, because that's the kind of an extraordinary price momentum burst we are in. Railway stocks is a classic example of money in cash being doubled. Previously, we used to talk that options could double your money within a week, but today, the way the mid-caps are moving, even cash stocks are in the same boat. So, yes, it's a momentum driven market. As I said, money making if you get the stock timing right. It's about timing the stocks right. And in the mid cap space, there are a lot of sweet spots where money can be made at a faster rate if you time them right. So yes, definitely in the last 2-3 months, there have been a lot of stocks which have given amazing returns and helped our clients achieve their trading goals. But to be honest, if you come with the mindset of doubling the money with a very short time space, then you will not be doing justice to investment theories, because this is just a phase of the market where things are going, it's a smooth run going your way, but it's not going to continue forever. So I would suggest investment would be more, you should give more horizon. If your goals have been achieved within a shorter duration, great, but always have a longer duration in mind when you go for your stock picking ideas.
Right. And Akshay, because it's my 27th year in the markets, I gauge a lot of things on how new investors and newer players ask questions when it comes to stock picking. That's why I ask, because that gives me an idea about the intensity of the bull market that we are seeing. Trust me, give it 6 months, there will be new investors coming to you and saying that why are you not investing in this particular stock or this particular sector. It's all a wonderful part of this thing that we call the market, and that's how it is. Like I said, people want to double their money in a week, and there will come a time when they want to double it during the day. Be rest assured, that is what the markets are all about. Let's look at the Nifty PSU Banking Index. I believe there is a very, very sharp rally happening at that particular index, because I see a lot of stocks ticking on my software. The Nifty PSU Index is the top gainer, 1.6% higher, 4783, and everything that has a PSU bank written on it is in the green. Bank of Baroda 201.25, Canara Bank 349.10, Union Bank 89.65, Bank of India 95.65. This is what I see at the day's high when it comes to such stocks. Also taking it away is the private sector energy space, in particular Akshay, JSW Energy, 408 rupees in front of me, a very, very high beta stock. What would you do?
Well, the way JSW Energy is placed on the charts, again 3% up. The charts are very promising. Again, it's more of a momentum pick from here on. I would still continue to be a buyer. Possible targets which work out going by the current readings on charts would be around 440 on the upside. I will place a stop at 390 and go for a buy trade in JSW Energy.
Fair point. That's what is happening, and now it's the PSU. It's the pharma basket that's coming on live, and the highest beta counter that one can ever imagine is Aurobindo Pharma, 867.70. This is coming to life with fairly strong volumes. Let's look at the FNO space and what are the other pharma companies which are ticking away merrily in the green. Let me just change my software things. Okay, Glenmark 2.6% higher, Apollo Hospitals 1.7% higher. Not a pure pharma play, Akshay, but Apollo Hospitals. What do you think? 50.94. The last time I checked the charts, it was headed towards all-time high. What would your view be on Apollo Hospitals? Fairly strong move on the charts, and you've seen it at the highest level since 1st of August.
So Apollo Hospitals on the on the weekly charts, if you see, it's given a breakout a few weeks back of an inverse head and shoulder pattern, which is a bullish pattern, which possibly targets the all-time high in Apollo Hospitals. Post that breakout, we have seen some bit of a lag, some bit of a slack period in Apollo Hospital, where the breakout levels have been retested at around 4850, and the stock is re-attempting a positive move. So be invested, or you can buy it for trading with a stop loss below 4850. That's the this trend line support now of the breakout zone, and we target around all-time high levels of 5850. The time frame for this trade can move to 1.5 months. So a positive setup definitely, and you can be invested or take a fresh long trade in Apollo Hospital at the given rates.
Fine. Like I said, it's the basket that's in the pharma space now that's moving. Glenmark joins the party. 799.95 in front of me. Aurobindo Pharma 872.65. Dr. Reddy's 56.55. These are the 3 or 4 stocks that have now taken the lead when it comes to pharma. What else is clicking? Canara Bank we've discussed. SBI Cards 856. And of course Bank Nifty, Akshay. It seems to be on the day's high. Let me just check on a different software what I have here. Just give me a moment. Yes, 45,363. Remember, Friday's high was 45,383. So, you know, a 20-point breather on Bank Nifty happens in a whisker. We'll wait for that to happen. And that's happening because the entire PSU basket on the banking side is aflame with gains. We've already discussed the Nifty PSU banking basket in terms of the index, but now Central Bank clicking it at 40 rupees 30 paisa, Union Bank 90 rupees 30 paisa, City Union Bank, of course not a PSU space but still 135.50. So a very, very nice green color across the entire market. We just spoke about JSW Energy at 408. It's now at 414. So you can well imagine how quick traders are when it comes to just capturing price action in their favor. We are waiting for Nifty to make an intraday high, still 19,907, but it's an inevitability that you'll see 20,000 coming fairly soon. And like I said, the railway pack is also moving very, very sharply. We've discussed the PSU basket within the railway stocks. Concor is again on the move. Remember, this is India's largest container moving company. Very, very strong land base, phenomenal balance sheet, and an irreplaceable jewel when it comes to PSUs. Its privatization was due, but sadly did not take place. Very, very strong traction coming on stocks. I think this is also a record level. Let me just check CCRI for you. At the moment, I see CCRI at 1727. Yes, no, we have a record high of 830. So there's still breathing space, but like I said, great value here. Akshay, would you want to put in a medium-term view on Container Corporation?
Container Corporation of India, the way it is trading, it's again, it's more in a bull run. I mean, there's no stopping most of the stocks you can pull up on the charts. They are just in the momentum phase. It's broken past its prior swing high of 713 that just sets up the stock on day trading charts. Positionally, if the way it is setting up, it is moving for the all-time high levels, which roughly around 800 odd levels, which we saw somewhere in the month of October 22. So positional targets with a 1.5 month perspective work out to 800. For a momentum swing, since it has got past its swing high, we can look at immediate targets of 750 within 2 to 3 trading sessions. So keep a stop of 710 if you are trading for that swing trade for 750 plus targets. Positional targets till 800 are intact. For positional targets, you need to keep a stop loss of 670.
Wonderful. So that's the view coming in when it comes to Container Corporation of India. Adani Ports, again concentrating back to Nifty constituents, 2.6% higher, days high 848.90. We have Hero Motors, 0.5% higher, 3031. Remember, these are stocks that are moving at their days high level within the Nifty. I see SBI 1.2% higher, 591.85. HCL Tech 1.5% higher, 1282. So the momentum continues beyond the first 20-25 minutes of trade. Akshay, we've held back. Honestly, taking your view on the Nifty, you wanted the first 15-minute candle to happen. The second 15-minute candle is also about to take place. What would your view be on Nifty? Would you want to chase that momentum, or you're happy with Bank Nifty?
See, honestly, Nifty is heading for 20K and the momentum is there. But if you were to consider from a risk reward payoff, the stop loss and the targets are near 20K. The stop loss would work somewhere around 19,770. So, the risk reward payoff doesn't work off for Nifty at the given juncture. Still, if you're chasing momentum, you can go ahead. 20K is on the cards, but the risk payoff is well placed for Bank Nifty because there is some more space to go. The all-time high was 46,300, which we saw in the month of July, and banking space should ideally participate considering the fact that Bank Nifty 2 has staged a breakout a couple of trading sessions back at 44,700. So my comfort from a trading perspective, because my risk reward payoff suits me, would be more in Bank Nifty than in the Nifty, where I will place a stop loss of 44,750 on the Bank Nifty for a positional target of 46,200.
Well, and like I said, Akshay, nobody is leaving any stone unturned when it comes to buying breakouts. Container Corporation, we discussed exactly a minute ago, a fresh intraday high coming onto Concor, and the price that I see on Concor is 729.90. That's how rallies are being picked up on your software. Fantastic move. I wish I was 20 years younger. We could have seen a better part of this rally again. Few more blue chip stocks. I'm so sorry. High beta quality mid caps on intraday highs. KPIT 1190. I'm purposely not going to take a technical view. The market is really overheated. I'm just marking these stocks for you. As also persistent. 6,008. That's how stocks are moving. Fresh record high. CDSL in sync with Bombay Stock Exchange, both up 4% each. 1354.90 is what I see on CDSL. Is this a record high on CDSL? Let me just check. It's being moving very, very sharply. 1354. No, this is a 52-week high. The last time we saw these prices was exactly 1 year ago, September 2022. The all-time high on CDSL is 1729. Still a lot of breathing space left in this particular stock. However, the Bombay Stock Exchange, which owns about 14-15% of BSE, has surged dramatically, 1392. A bit of a profit booking happening here, but Like I said, it's a runaway trade. And what we were seeing happening on Container Corporation, BSE, CDSL is now happening on Adani Ports. Remember, I marked this stock before markets opened. This is one of the prime beneficiaries likely to be in this corridor that's being set up between India and Middle East and Europe at 851.35. The stock had opened 15 rupees higher. Now it's 26 rupees higher at 851.35. That's how the move is. Strong buying happening in SGVN 7020. Again, a fresh record high here. Anything, Akshay, which is not at a fresh record high and you like?
Most of the stocks, it's about chasing momentum and buying the strength, and stocks which are stronger will grow stronger. So if something is not performing, it's a problem. That's how I see it, because, if the markets were to see any bit of profit taking, the weak hands would be sold out first. So chase the stronger hands, chase the momentum, be in the right stocks is what I would recommend.
Right. Thank you so much, Akshay, for this wonderful advice. You are young, and yet you have good wisdom when it comes to tackling bull markets. It's a pleasure hosting you, Mr. Bhagwat, and I'm sure you'll make yourself available in the coming weeks and days, as well as this wonderful rally unfolds on the Lal Street. And we take it that Nifty will hit an all-time high somewhere this week, because that's what you've predicted. Thank you so much.
Thank you.
Okay. Our next guest, ladies and gentlemen, is Mr. Atul Goyal. He's the Chief Financial Officer of Brigade Enterprises. We'll discuss a lot of things as far as sector outlook and business is concerned for this wonderful real estate company from India's Silicon City, Bangalore. What a pleasure to host you, Mr. Goyal. Welcome to Business Today Television. Your stock is doing fantastically well, as also your monthly and quarterly sales when it comes to high-end luxury homes across the country. Tell us, how do you feel at this point of time when it comes to business pipeline? What can you share with shareholders of Brigade Enterprises and sundry investors, sir?
Thank you. Good morning. Pleasure to come to your channel. Brigade Enterprise has been doing exceptionally well in terms of sales. Our company is divided into four verticals, that is hospitality, real estate, then we have commercial spaces, and of course retail. So residential sales forms a big part of our portfolio. So resi sales right now has been doing very, very well. We have already done 6.2 to 6.3 million last time, and we'll try to do it this year as well. We have been, real estate demand has been very, very good. I think because of the consolidation interest rate paused by RBI, people buying more, their affordability has been increasing day by day. Today, as per SDFC report, affordability has increased by 3x. And of course, there is a change in environment as to more Gen X and more millennial peoples are buying houses. Investments has increased in real estate, because people think in a recent survey that 61% of people want to invest in real estate. So real estate has been doing very well. There has been a price rise. People are looking for the return. So I think going forward, residential is going to stay. As per the commercial, we have around 8.5 million, and out of that, only 1 million is vacant, which is there in SEZ, which will also get leased. So we are not worried about that. Hospitality is doing wonders now because they've been doing very well. We have already achieved our pre-COVID levels, and our occupancy levels are very high. And of course, retail, we only have 3 malls that are also doing very well. So all guns are blazing right now. And I think the way economy is there, it should sustain.
Right, Mr. Goel, I really like this phrase that the guns are blazing and the economy is in fine shape. Tell us how many million square feet is there in your pipeline in terms of sales which are expected over the next 2 quarters, both commercial as well as residential?
So we call it as a real estate. Actually, we don't give any guidance. But anyhow, I'll tell you, we are, as per our investor reports, we are saying rolling quarters will be doing 7.2 million square feet of launches this year. So seeing a trend in the real estate market, I think we should do well.
Come on, Mr. Goel, share some insight when it comes to future projections. We are in this, a wonderful phase of India, Amrit Kal, as they say. Your stock is at a record high. I'm sure, investors need some hand holding at current levels as to how thick and fat is the pipeline at Brigade Enterprises.
So I
Be
will only
generous.
say my real estate CAGR has been around 20 to 22%, and I think this should be suffice to see as to what increase they can look for a sales in this year. But definitely we are trying our best. Market is doing good, and we'll try to surpass the last year's pre-sales. That is what I can say.
Okay, let me coax this out of you in a different manner. Uh, so, Mr. Goel, there are two kinds of investors in the market. Uh, Poor folks buy stock prices. The rich guy buy flats that you sell. Tell us what is the breakup in terms of luxury flats and in terms of common middle class flats that you will be selling over the next 6 months. Is that a fair question?
It is a fair question. So, thank you, Shalbhai. What should I say? See, today market, if you study, 62 to 65% sales is in mid-income housing, which is from 60 lakhs to 1.2 to 1.5 crores. And Brigade's major sale aspect has been in mid-income housing. Our strength is in mid-income housing. That's why sales have been doing well. Luxury, yes, our luxury portion is very, very less. I think you can say around 10% of our total pre-sales is luxury, but maximum our sales is in the category of mid-income housing, which is in the range of say 60 lakhs to 1.5 to 2 crores.
Goel Sahab, when it comes to EBIT margins, we've seen a minor dip over the last 3 years compared with the previous 5. So the previous 5 was 16.3 and EBIT margin for the average for the previous 3 has been 13.9. Of course, this is to do with the rising raw material costs of steel, cement, labor, government taxes. One understands that. But, there is this theme in the market that customers which come to Brigade Enterprises or your rivals such as DLF or Oberoi Realty, they want to pay top rupee when it comes to buying bigger flats, larger flats. At least that is what we understand in stock markets. So how come your EBIT margin is not keeping in sync with what is being sort of discussed in the markets?
So see, we cannot compare Oberoi Realties and Brigade because we are operating in a separate market. They are operating in Mumbai. Anyway, the EBIT margins are much higher than in Mumbai, in Bangalore, which is a very price-conscious market. But I would like to say that our EBIT margins has been in the range of 20 to 25%. The only issue is the accounting, which is there, which is AS 115. Because of that, I'm not able to recognize revenue till full registration happens for the property, and that is the reason because of the variation in the sales recognized, your EBIT margins get affected. But anyhow, and there is also a mix of project which which depends upon as to what mix of projects are there. But we are very clear that our EBIT margins should be in the range of 20 to 25% definitely going forward.
Fair. And you have some 3,500 crore worth of debt on your balance sheet. Any plans to trim that?
No, we have already trimmed that. We have no debt in real estate. So we have a zero debt in real estate. Whatever debt is there is in LRD, and that is around 70 to 80%, and some 10-12% in hospitality. So we don't plan to pay that debt. We'll continue that debt because these are all self-sustaining debt. We don't have to contribute anything. So we will continue with that. Of course, with the EMIs which we pay year on year, this debt is going to reduce year on year.
Right. And any more fundraisers in the pipeline, given the fact that we've seen such heavy demand for quality real estate, both in the middle income as well as the top end luxury segment?
No, I don't think so. We require any fundraise. We are sitting on a good cash pile right now, around 1,700 crores, and I think that is enough to buy, to replace your land, whatever sales you are doing. So we don't think right now any fundraise is required for the company.
Okay. Mr. Goel, I believe you have another engagement post market today, and we'd like to thank you for sparing quality time with us. A wonderful move seen on Brigade Enterprises stock price over the last 6 odd months at a record high. And Mr. Goel, while he does not share the guidance for the company, says it's a wonderful time to be in real estate. Thank you, Atulji. And I hope you'll visit us again with the wonderful insights that you carry for the real estate space. Thank you so much.
Thank you.
Have a nice day.
Same to you, sir. Thank you.
Thank you. So that's it, ladies and gentlemen. The Nifty is now hitting a century. 100 points higher, 19,925. A beautiful, beautiful day panning out on Dalal Street. Given the strength, I have this feeling that you just might see an all-time closing high on the index today. Remember, 20,000 is what we saw in the pre-open space, a mild flicker there. The Bank Nifty has already hit double-digit century, a double century there, 45,400. The Nifty IT index is about to hit a double century, 185 points higher, 32,603. There is an absolute carpet of green across the Lal Street, and it's the railway stocks that have taken the lead in pushing sentiment, pushing trend, and pushing the Lal Street higher. For the moment, that's all that we have on market today. But joining us at 12:30 would be a market master, Mr. Atul Suri, the CEO of Market Trends. This is a portfolio management scheme. Will be joining us for about 45 minutes to discuss where markets are headed. Mr. Suri is a very well-known chartist, and he deploys a lot of magic when it comes to picking out long-term winners. So join us again at 12:30 and enjoy a wonderful session with the market master Atul Suri, CEO of Marathon Trends, a portfolio management scheme. Thank you so much for your time and enjoy your day.
He's a very well-known chef, celebrity chef, TV personality, and he's someone who actually cooked a lot of wonderful dishes, including some millet dishes, for the First Ladies, including Akshata Murthy yesterday. Chef Kunal, good to have you. Good to see you as well. Interesting and important time for India, for Delhi, for persons